However, we have a dedicated specialist with Kraken that helps our clients set up accounts quickly and get everything taken care of to where as they're transferring coins over into their trust crypto account, they're able to not have to wait so long to sell out of those positions, because sometimes timing can be incredibly critical and important. Now let's talk just a little bit more about crypto. Brett and I have had some very good success setting up. Now we're on our third crypto Deferred Sales Trust. What does that mean? So we've had other clients that have done the Deferred Sales Trust, and we've approached it through a number of different ways, whether it's through a stock sale or other things. But now we've been approaching the crypto because of Kraken and Gemini and some of these other digital wallets that are working with us. They've acknowledged the existence of the Deferred Sales Trust as an entity. So like Coinbase, if you set up an account with Coinbase, that's not just a personal wallet, but a digital wallet, you can do a normal like family trust account. You can do a business LLC account. You can do a C Corp account. You can do an S Corp account. They look for like a recognized entity. And now more and more, we're having these digital wallet platforms or custodians recognize the Deferred Sales Trust as an entity. And what took probably over 90 emails and probably 3-4 months for the very first account to open up with Kraken, now we've successfully opened up another one in less than 2 weeks. And we're on our third one that hopefully will open up any day now. The process is just quicker and quicker and quicker. And now we also, when anybody that has a crypto account, has anybody ever received a dedicated specialist who is like the same person that helps them through? It doesn't happen. It doesn't exist. However, we have a dedicated specialist with Kraken that helps our clients set up accounts quickly and get everything taken care of to where as they're transferring coins over into their trust crypto account, they're able to not have to wait so long to sell out of those positions, because sometimes timing can be incredibly critical and important. A lot of times we help the client get everything set up. We help the client know and understand the new process, how to work with the trustee, how to coordinate the selling of the coins or the purchasing of new coins. And it's been a fun process where we've been able to provide solutions to a lot of the headaches other people have had. When I say solutions, I'm not just talking about taxes, but we've had clients complain that, hey, if I want to participate in this Deferred Sales Trust, here's again one of their hesitations. My goodness, it took me forever to set up my LLC with whatever platform, right? And now we can tell them, well, hey, we can get it done in probably 2 weeks or less. And so whenever there's a specific scenario out there that we see time and time again, Brett and I and Pierce and everybody else, we team up and we try to find the very best possible way to achieve and to overcome some of those obstacles. And one of those was simply just getting a digital wallet in the name of the trust. That was something that we were working on 6 months ago, and now we've got great solutions for. And more and more of these custodians are jumping on board, and it's pretty exciting.
All right. Hey, welcome everybody. Brett Swarts here, founder of Capital Gains Tax Solutions. We're here for another mastermind. Excited to be live streaming on YouTube, on Facebook, on Twitter. I'm actually out in Las Vegas today at a real estate convention, teaching and training people on the Deferred Sales Trust. I'm here with my co-host and business partner, Jake Miller, who looks like he's clean shaven today. He's looking really, really good. Really handsome, man. How are you today, Jake?
I'm doing well, but I don't know that this can be considered clean. It was clean yesterday. Definitely a different look. Somebody told me that I'm 10 years younger, and I don't know if that's good or bad. In the business world, everybody wants to be old, I think, but for like personal appearance, a lot of people want to be young. So I'm somewhere stuck in the middle.
Well, it's
good, man.
That goatee that you had going there, man, that, it looked good. You look good either way, but I would say 5 or 7 years younger. Your skin looks good. The hair too. I think you got a little bit, you cleaned it up on the side a little bit. I mean, you're just a good looking guy. I'm not gonna lie.
Well, I don't even know what to say to that, but thank you. And yeah, you know, my wife, she likes it long, and I rebel, and I trim it up because for me it's less hassle, less pain, and I'm all about functionality.
I can appreciate that. And hey, welcome. We got Andrew, we got Pierce, we got Rebecca. You know, Rebecca, you're in Tahoe. I mean, we were just together, by the way, for the first time, Rebecca. What a pleasure it was to meet you in person, hang out, EXP conference, talking DSTs, EXP commercial, business brokers, M&A. Rebecca, talk about the week and how everything went for you.
It was awesome. It was great to meet so many EXP people and talk DST to people that didn't know about it, talk about my market and what they're doing in their market. I met some great people that just from all over the country. It was super fun. It was great to meet you. It was great to meet your brother. Gosh, it was amazing. Just the people, the quality, the fun. It was a lot of fun. My feet are killing me. I can barely walk. I still can barely walk, but it was a lot of walking. But it
amazing,
was
right? And then Venus Williams spoke, and Grant Cardone. Yeah. I mean, the leadership and like the technology, the platform, the people, it just keeps exceeding my expectations, and I hope it exceeded yours so far. I'm so excited that you joined the XP family, and you joined my the greater team. So now we're all business partners in this thing together. And for those who don't know who Rebecca is, she is an expert residential and luxury agent in the Truckee Tahoe area. And so glad to have you here again, Rebecca. And now we got my other team member and business partner, Pierce York, out of the one and only like Newport Beach area. Pierce, how you doing this week? We missed you.
Good. No baby yet though, so I feel like I could have gone. A rough one.
You know, you made the right decision though, because that's too much risk versus not enough reward, right? I mean,
a lot of risk.
I would agree there.
My wife would have killed me.
You would never leave that down, right? You're like,
never.
Yeah, I was at this real estate thing, babe, like in Vegas. Oh yeah, and when I was having my baby, right? You're just that's the next 50 years of your life. You're just shot here, so you don't want to mess with that, bro.
Yeah, but anyways, I'm glad to hear it was awesome.
Yes, we missed you, and we also have Andrew. Andrew, hey, why don't you introduce folks?
Hello.
Andrew, where you calling from, and introduce your specialty.
Hey, I'm calling from wet Seattle. I would love to be in Truckee right now. That'd be awesome, but here I am. I'm calling from Seattle. I run Nighthawk Equity. We are a real estate syndication company. My partners are Garrett Lynch and Michael Blanc. You guys might have heard of Michael. Sure. We run a podcast there and raise money for apartment buildings. We own about $200 million of apartment buildings, 18 properties all across the Southeast. And so Brett's been on our podcast before, and I think that Michael's been on yours too. Is that right?
Absolutely.
Yeah.
And Andrew and I, we geeked out last week, a week and a half ago on the DST. Yep. So I'm so glad to have you. Keep going, Andrew.
Yep. Yeah. And so, I mean, had a call with Brett, and he's like, listen, you're raising money $100K at a time. That's really cool. But add a zero to that. Think about $1 million at a time and what that would do. And it's like, yeah, that would be really nice. I do a lot of the investor relations side on the back end. So when you have 80 to 120 investors on a deal and you send out a monthly report and the number of questions that come in, the amount of time that consumes, it's our job. It's our sort of joy to service their needs and address their attention. But at the same time, it's just literally hard to scale. So as we're growing from $4 million deals to $40 million deals, if you have to 10x the number of investors, that gets hard to scale. But if you can have investors that are doing $1 million at a time, that's pretty exciting. So in that vein, I was like, let's learn more about DSTs. And so he said, join our mastermind. And so I'm missing my weekly workout to be here, but that's my level of devotion to this call. Is usually I'm just lifting weights and getting slugged by my trainer this time. So I'm glad to be here, but also sad to be here in that sense.
Awesome. Well, Andrew, thank you for making the sacrifice, and we won't let you down. And yeah, we are building we think it's a movement of tax deferral. It's no longer about just cash flow. That's always important, but it's more and more and more important to have tax flow, right? Strategies and plans to make sure that you're not getting hammered with taxes, and or if you're raising funds for syndications, that you're doing it in a way that addresses the tax challenges. And in fact, this is why it's the crypto capital gains tax deferred sales trust mastermind here. and that we believe it's the largest opportunity in the history of raising capital, of transferring into real estate deals, of getting diversification, of getting some liquidity that we've ever seen before, right? And Bitcoin hit another all-time high. Jake, what were your thoughts on just the marketplace last week?
My goodness, things are going wild, if I can say that. So definitely a time that things are climbing, and all the people I'm talking to, they're not selling yet because they foresee it continually to rise. Interesting all around. In lines with some of the things that you mentioned, Brett, I'd like to bring up the fact that, as far as revolutionizing the options that people have, and Andrew, for funding the various syndications that you're going to continue to have across the United States. My goodness, people have constantly been going after individuals who are selling their properties for 1031s. And they've even created Delaware statutory trust funds. I mean, these things are decades old, right? This is the traditional route of saying, hey, as an incentive, as a tax incentive, if you have a transaction, let's be smart, let's be wise and prudent, and let's roll it from one to another. However, with the Deferred Sales Trust, which is gaining a substantial amount of popularity and has also been around for 25 years, it provides a degree of flexibility that the other options really just don't have. Timing is on your side. You don't have to sell and buy in an up market. You can definitely choose amongst a variety of asset classes rather than being forced into something that is like kind. And so there's just a number of different things that make it easier for somebody like yourself, Andrew, to attract investors who are going to sell what they have to syndicate with the funds that you've already created.
Yes, and that is part of the vision, right? To make this thing really simple for everybody and also unlock just what's possible. I did a speech or a little bit. I was on a panel and I was giving a little mini speech on the Deferred Sales Trust yesterday to about 250 commercial brokers, M&A advisors here in Las Vegas. And one of the things that kind of came to mind is just like reimagining what's possible for unlocking capital, for doing more deals, for adding more value. Right? Because guess what? As taxes go higher, it's more and more valuable to have a solution for those taxes. And in fact, it's somewhere between 30 and 50% of every property or every asset that you sell, depending on the depreciation recapture in the state in which you're in, it's going to get wiped out in capital gains tax on the gain. And so that is the vision of this, to make it very simple for everybody. So if you're selling a business, if you're selling real estate, if you're even in partnership, if you have GP interest, we did a $20 million deal with a client in Las Vegas he is an apartment syndicator like you, Andrew, and they sold, and they did another 16-1 in Phoenix. And they just closed another one last week, and I have to figure out what state that one's in. And then they're investing in multiple syndications. Hey, hello and welcome, Sandro. Glad to have you here. And so the key thing is clarifying, your wealth plan and the challenge or the folks that you're serving, right? What are their challenges? And reimagine that you don't have to gather wealth through a TIC structure, a carve out in a 45-day 180 sprint, right? That it can be flexible and they can be diversified. And in fact, that leads into the second part of our conversation, which is the deal close story of the week. Excuse me. And it is one of a dentist, and the dentist is on the East Coast, and it's I can't say the names quite yet because I don't until I get their permission. But this particular practice, they've been doing it for over 25 years, zero basis, and they are selling to retire, and they want to be in this particular scenario, they want to be in stocks, bonds, mutual funds, just investment grade securities. That's kind of their comfort zone, which is totally cool, and so they're selling, they're deferring the tax, and it's about a $1.5 million sale, but it's substantial. It's about $400,000 to $500,000 of tax liability that they're deferring, and so it's a big amount of opportunity for them to have wealth for generations to come, to pass it to their kids, to pay for college education for grandkids, and so that was neat. It was pretty straightforward. They did want to talk to a few other dentists, and I had him talk to a veterinarian client of mine who had closed about 4 months ago, and he had sold in Connecticut, and so they talked with them. Of course, talked with the legal team, went through everything, and it closed. So that was the deal close story of the week. And the neat part is my team working in the background. We have a full staff team members helping to coordinate all of these things while I'm traveling and being able to speak. And so that's another kind of tip for those who are business professionals. If you don't already have ways to delegate, you want to jump on that as soon as you can and hire the staff to support you so that you can help more people. That being said, Jake, any thoughts or feedback on that one?
It's all about efficiency with you and your staff and your workflow and your tax flow and your cash flow. Rate of return is important. Tax rate of return or tax savings rate of return is critical. A lot of times people want something safe and secure. They're looking at 6, 7, 8%, whatever, right? And that 6, 7, 8% looks a lot better when you have 27%, 37%, 50% tax savings. And so that's what we're looking for with people. Brett and I, even before these businesses that we now own, operate, navigate, what have you, we've been involved with helping people make their processes and their businesses more efficient from a financial perspective, from a transaction perspective. And it's all led into this. The Deferred Sales Trust being one of our best tools, one of our most flexible tools, and it kind of helps individuals because it's very customizable. This isn't a cookie cutter thing that comes out of the factory and it's one size fits all. This is something that you may not be eligible for. So first and foremost, we review your situation, your circumstance. Do you have a highly appreciated asset? Is there going to be a future sale of that asset? And how does this all work? What would your tax liability be? We figure that out before we even go down the road so that we understand what your benefit from day one would be should you do the Deferred Sales Trust. And if the benefit isn't big enough, we let you know. And, sometimes it still makes sense to do it, but it's not the home run we were looking for, right? Could be a base hit, could be a double or a triple. We let you know that so that you can make a conscious, deliberate decision based on the facts and not some sales pitch, if that makes sense.
Makes perfect sense. And for that, I want to ask Pierce for our listeners, and what's our minimum deal size and why?
Yeah, typically our minimum deal size is $1 million net proceeds, $1 million gain. And that's just because at that point, that's where the numbers work well for them and they work well for us. And I think there's a little bit of play there if the people are cool and they're super motivated and, and there's a substantial capital gains tax liability. But typically it's $1 million and $1 million.
Yeah, very well said. And Rebecca, I know you're working on your rental property the development property that you're building right now. What stage are you in there? And just for our listeners, what do you think in the potential liability, especially because it's in Truckee, right? It's on the Nevada side.
Right. It's on the California side. So we're getting the roof on it, just finishing the framing section. So hopefully be done by May, June of next year. In today's current market, it's probably going to be worth $2.5 million. And we'll have like 225 in the lot and probably around 800, maybe 900 to build. So we're going to have, almost, 1.2, 1.3 million in gains.
And those will be long-term, right? Because you've held it for a year.
So, yeah, technically we'll have held it for a year.
I heard some different things on that, right? Because if you're doing construction when you're doing it, right? So it can be kind of a little bit. The good news
is a little gray.
It's a little gray, but let's just imagine it is long term. So 1.2 is the gain, right? And we're just going to use 20% federal, right? Yep. 13.3% state of California.
Yeah.
3.8% like the Medicare Obamacare tax. So just use 37%, right? 37%, because there's really been no depreciation since it's a new build, right? Maybe you did, but you probably didn't. And we also wouldn't recommend cost seg on something that's new build that you're not going to be holding for the next 3 to 5 years. So really make sure you get your ROI on that. Yeah. So at 37%, this is a great example. That's $444,000, right, on tax. So that's substantial. And now let me ask you, if and when you could find a 1031, which you may or may not be able to find, that is an option. You could go put it to a QI and you could go for that 1031. Part of the challenge with the developers we work with, though, is that a lot of them want to keep developing, which means equal or greater value, right? And also means a spread out time period. It could be 6 months, 12 months, 24 months to finish the build. Whereas the 1031 is in that, that shotgun wedding of 45 days to identify, 180 days to close, but it's also equal or greater value. So that typically the land, if you're selling for 2.5 million, is not going to be able, you're not going to buy land for that. You're going to buy land for 200 or 300,000, maybe 500, right? So there's a number of reasons why the blockbuster 1031 doesn't work, right? But I'm curious on your thoughts on that. Where do you guys envision putting the wealth? Do you want to do more of these development deals? Do you want to maybe be a little more passive and go into some other stuff? What is your thoughts on that?
So our thoughts are really to diversify, do a little bit of the development, but maybe not in that realm of building a $2.5 million home again, maybe building $1 million home. So obviously a lot less money input, and then diversifying into multiple different venues. So whether it's, mutual funds, stocks, bonds, that kind of thing, I'm interested in
Government
maybe doing
syndications.
some syndications. Exactly. No, we know real estate. So keeping it in real estate and building appreciation and that kind of thing moving forward.
Go ahead, Andrew. Jump in.
Just a question on there, because I've never built before, but my understanding is that when people are flipping homes, when people are buying homes, from a tax certification, that is defined as inventory. And because it's inventory, you can't get long-term capital gains treatments. You get short-term capital gains treatments. That's one reason why in our business, so many people start flipping and then they get crushed by taxes and they move into the long-term benefits of apartment buildings. But Rebecca, what I heard you say was that building this home, and I missed part of it because I had to take a phone call, but building this home, you believe that you're going to really have it taxed as a long-term capital gain. Did I hear that correctly?
So part of it's a bit of a gray area because we've owned the land for over a year now.
Okay.
And so the house will be completed and that'll be around 18 months, maybe a little bit more.
Okay.
So it's really a gray area. The last time we did it, it turned out to be long-term, according to our tax advisor. So it just depends.
Yeah, I mean, obviously he or she knows more than I am. I'm asking a question,
Right,
not sort of
right.
Great question,
pointing a
Andrew.
finger. Yeah.
It's a great question. And to that point too, as well, I at the real estate conference here with EXP conference here in Vegas, I have a broker. He's done, 500 deals. He's in Sacramento. He called me and I actually saw him local. He's like, hey, I got a guy, he's buying a deal and he's basically assigning it and he's flipping it within a day. And he's going to have about $1 million short term. Can he solve it? And the answer is yes with the DST plus. Okay. So part of why the challenge with the 1031 is it only applies to investment property and doesn't apply to crypto, doesn't apply to business sales, doesn't apply to artwork or collectibles or public or private stock. The Deferred Sales Trust applies to all of that. But the second thing is the reason that, and that's why it's Netflix, right? The second thing is the Blockbuster 1031 doesn't do short term. It only does long term. Okay. Guess what the Netflix Deferred Sales Trust does? It can do short term. So even if the tax person that Rebecca, you're advising with said, hey, it's actually short term, we'd say, okay, well, we're going to do we call it the DST plus or the DST 2.0. It's a little bit different, but it's unlimited on the amount it can go into this thing. It can be $1 billion deal. It can be 100 million. There's no limit to that. It's a little more inflexible on the payments out. Once you start, it doesn't stop, but it works for short term, which is pretty amazing, right? It has all the other flexibilities to go into stocks, bonds, mutual funds. Jake Miller is his financial advisor to help with that, as well as back into commercial real estate syndications. Andrew could be an opportunity for that. And the key is diversifying it and based upon what Rebecca and her husband feels really good about. But just FYI on there, we work for short term or long term. Any other thoughts on that, Andrew or Rebecca?
I mean, it's super interesting that you can do short term and long term. And of course, if it is short term, then number one, 1031 is an option. But number two, the tax savings are even greater, right? Because of course it's a 37% bracket. It's basically income, active income or wage income, as opposed to being an investment. So it works. It's a 1-2 punch to your advantage. Brett, when you talk about DST plus, are you saying that to distinguish it from the Delaware statutory trust? Is that why you're you're using that language to distinguish it from the Delaware statutory?
Let's clarify. So Delaware, we should just call it Delaware 1031. call it Delaware 1031 Blockbuster, right? And they're both Deferred Sales Trust, Delaware Statutory Trust, they're both DSTs, but they get so confused.
Right.
So for everyone in our community, we're just going to call it the Delaware 1031 Blockbuster, right? And for us, it's a Deferred Sales Trust and the Deferred Sales Trust Plus, okay? And I like to say Deferred Sales Trust 1.0 and Deferred Sales Trust 2.0. So for 2.0, that's the one I was referring to, but yeah, not to be confused with the Delaware 1031 Blockbuster.
Right.
Which, by the way, we still do some of those too. Like, by the way, it's not these tools. We need to figure out what you're trying to solve for. If you have a mortgage over basis, we want to solve for that using a Delaware. There's nothing better than a Delaware to solve for a mortgage over basis. But remember, Delaware 1031s only work for investment property. So if you're selling cryptocurrency, you can't Delaware 1031 Blockbuster, right? You can only Deferred Sales Trust. If you're doing short term, you cannot Delaware 1031 Blockbuster. You got to do Deferred Sales Trust 2.0. So part of our job is to help you clarify the problem you have with tax, 2, the vision you're trying to create with your wealth, and then 3, what's the best, most efficient way to get there. Jake, any thoughts on that?
Yeah, so I mean, the same holds true if it's a business. So if it's stock in a business or stock rights or something like a lot of employees that are W-2 employees receive various types of incentives like stock options. So it's an option to receive the stock, and they haven't collected it yet. So in a way, that's a sales transaction, or that is a transaction that would otherwise be taxable. And again, going back to whether it's long-term capital gains, short-term capital gains, if it's a business interest, if it's crypto, any other type of highly appreciated asset, it's not subject to the like-kind rules of real estate. Sometimes, again, going back to how this is very customizable to the individual circumstance, we need to mix and match various financial tools and instruments. The Deferred Sales Trust just being one of many. There's been various examples that Brett has actually helped people with a 1031 and a Deferred Sales Trust jointly to make the client's outcome more efficient and tax optimized.
Excellent. So let's transition a little bit here, and then we'll get Sandra to answer any questions after we talk a little bit about the kind of the crypto part of the mastermind. So that is our number one focus, is helping anyone who's in Bitcoin, Ethereum, XRP, even NFTs. Okay, we've opened multiple accounts now with Kraken, even in the last couple of weeks, and we've got a seamless transition to do that. It's very difficult in the beginning, but we've found a way, and we've connected with relationships there to do this. But that being said, Jake was almost going to be here too in Vegas to meet with a joint potential client of ours. And what's really cool was he used to be in door-to-door sales, and he used to sell alarms. And
the client, not me. No.
yeah, the client. And he learned and started to study cryptocurrencies, in particular NFTs. And then he connected with a group who was creating one. And he said, "Hey, look, I want to take an equity position and help you guys promote, build this, market this, educate people on what it is, the future of it." And it exploded. And it's in the tens of millions of dollars. And he's 33, and he's got a couple kids, and he's he pulled up in like a really fancy car. He said it was the hard. He didn't grow up with much, by the way. And he said, "Hey, look," and he's got like this orange looking. It's like almost like a Lamborghini. It's not a Lamborghini, it's something else. It was like a McLaren, something. It had 1,000 horsepower. But he goes, I have. But he's worth a lot of money now. It's pretty cool. But really humble guy, hardworking guy, cool guy. He liked Grant Cardone, so we attended the conference, and he heard everything there. But his big thing was, how do I go and buy real estate? How do I go help more people, build wealth, understand cryptocurrency? And he's loves the Deferred Sales Trust. He hasn't become an official client yet. And one day I hope to have him on, have him share his entire story. But it's just the power of the Deferred Sales Trust to say, what are the odds that some person in Vegas, he lives in Vegas, to meet and to start to do potential transactions to solve his problem, and using the Deferred Sales Trust. And that's why we're here. That's why we're trying to build the understanding of it, make it really simple, again, for everybody. With that being said, Pierce, any thoughts on the crypto side of those things? Or he's even, by the way, he's even looking at a beach rental, an Airbnb beach rental. And I thought of you. I said, look, I got Pierce on the ground, and because he goes, I like to visit it sometimes, but I like to Airbnb it most of the time. Can I do that with the Deferred Sales Trust? And the answer is yes. I mean, you can't use the funds for a primary home tax deferred, I mean, you can pay your tax on that and go buy the primary, but he wants to do like a beach rental. So there might be a guy coming your way. If he pulls up in like an orange, like McLaren with like 1,000 horsepower, that's the guy, Pierce, if you're wondering.
Just give me his number. I'll call him and make sure that happens. I don't like to leave things to chance if I don't have to. Yeah, no, you can absolutely do it with an Airbnb. I gotta love your Airbnbs, man. You just gotta have good management, or else you're going to be digging in the toilet when the 4-year-old throws the Danimals container down the toilet. And you got to go fish it out. So,
because you have one there, right? Talk about that, right?
Pierce, that's entirely too specific to not be a real story.
It's an absolute real story
going on.
Yeah. So I'll just add a little bit there, because when it comes to tax advantage wealth management, this individual with the orange McLaren with the 1,000 horsepowers, right? He has some goals, and that's really important, because we help people accomplish some of those goals. His cash cow business, or the venture that helped him make all of this money, right, came from a very modest background, and now he's got a substantial amount of wealth. How does he exchange that wealth in a tax efficient way so that he can keep it going? Not only keep it going, but make it grow, right? He has a lot of goals and aspirations, and he wants to do stuff in real estate, but that's not where he made his money. He made his money in crypto. So how do we change in and out of these assets so that he can, one, diversify, two, benefit in the most efficient way from his cash cow business, where he's making everything, into other outside assets, so that he can increase his net worth while simultaneously decreasing his tax liability? And that's what the Deferred Sales Trust can help do and accomplish.
It does. Go ahead, Jake.
When we have the initial transaction, this then becomes a vehicle by which it can absorb. When I say absorb, it can buy other assets, or it can participate in joint ventures, so that more outside assets can be accumulated. And it becomes just a phenomenal tool to make a lot of different things possible. To navigate the waters of how to use it, you end up with an amazing trustee and a financial advisor who is able to be there working with you moving forward, so that we can work with other professionals like Andrew and other professionals like Pierce, and help you accumulate those outside assets.
Yeah, and he wants to take to $1 billion. So Grant Cardone's on there telling his story how he came from really nothing and built up to over $1 billion in multifamily investment real estate. You know, Robert Kiyosaki says the reason to own a business is to purchase real estate. So I was telling him, I said, hey, your reason to make it big in crypto is to go buy real estate to offset the tax, right? You did a business crypto deal, and now we got to buy real estate. Now we got to buy it smart. We don't overpay, but guess what? We have amazing partners across the US that you can passively go into, actively go into, joint venture with. And he goes, yeah, let's go do it. He wants to do self-storage value add. He wants to do multifamily value add. He has some construction background too. So it's a good, real good fit. That being said, I want to open up to Sandra. Sandra, do you want to unmute and introduce yourself? And happy to answer questions. And also I want to get to Mike too. I want Mike to also jump in here in a minute. He just joined us, I think, a little bit late. Go ahead, Sandra.
Hi, everybody. So I just joined EXP a week ago. And so I saw this, and when I have no clue what they're talking about.
Were you in Vegas? Did you see?
No, I was not in Vegas.
Okay.
And so it's like, okay, I'm jumping into this. Every new class that I saw, I was sitting up here signing up for it. And when I saw this one, I went, this is going to help somebody.
Mm-hmm.
And so I'm listening to you all talking about these 1031 exchanges. And then but eventually that tax burden is going to hit somebody when they're ready to sell. And what are you going to do then when somebody's got $1 million, $2 million, $3 million tax bill? Because they're like, I want to sell this. And they go, no, I can't sell it now.
Right.
So I'm here to learn.
Beautiful.
And so I'll be on here every week so I can figure out what you're talking about. And then I can jump in and start asking some really good questions.
That's perfect, Sandra. Welcome. Congratulations on making the best brokerage decision and probably business and leadership decision by joining EXP. So glad to have you part of the family. And I'm going to open to Mike. Mike, you want to jump in and introduce yourself?
Yes. My name is Michael Waters. I'm with Quest Crypto. And I first interviewed Brett on his podcast with his Deferred Sales Trust, and him and I became brothers of a different mother when I realized him and I share the same enemy, the tax man. And so he's not really an enemy. He's just a He's just a foe that you have to do battle with intelligently. And, I just fell in love with the Deferred Sales Trust and what he does. And I work with a lot of people in crypto who have the identical problem. In fact, I literally met this weekend, and I was down in Vegas this week. I met with a guy who owns 15,000 Bitcoins, verified, 15,000 Bitcoin. And he told me, he says, I don't know what to do with it. I can't sell it because I'll tank the market. I can't spend it because no one will buy it from me. And he's like, but yet I got $1.5 billion basically in Bitcoin. It's insane. And so that's what we do, is we show people how to merge the crypto world into the real world. We have a technology that allows us to specifically attach crypto to real estate. And so one of our specialties is, if you have a large amount of crypto and you want to buy real estate, we will come in, we will buy the property for you. We will then put the crypto collateral, the crypto tokenization on the property, then exchange the crypto for you to avoid you having that cash out scenario. And in some cases, cashing out may not even be a taxable event as much as it's a catastrophic event to the value of the coin. Sometimes just cashing out the coin tanks the value. And so if you can trade it across for another coin without cashing it out, that also lets you get maximum value. So that's what we specialize in, is solving the real estate problems. And we're the first company and the only company that does it right, in my opinion, that actually attaches direct assets to real estate in an irrevocable format. So we're essentially a land-backed crypto. So that's it.
It's phenomenal, Mike, and we're so glad to have you part of the community. And we're gonna be doing some webinars on that, because it's a lot, right? And we're on the front, but computers were a lot 25 years ago, right? When no one knew about computers, like what the heck is the internet, right? People didn't know what's a dial-up, right? We're in the beginning, and so Mike, Jake, Pierce, Rebecca, me, we all want to help everyone out there make this simple and then apply it to how it's going to help you. And so I have to jump on a plane. So what I'm going to do right now, I'm going to just pass the mic over to Jake, and then he's going to finish this out. By the way, if you want to connect with me, go to capitalgainstaxsolutions.com. If you have a $1 million net proceeds, $1 million gain, you get a free consultation with myself or Pierce or Jake to find out if this is a good fit for you. Of course, subscribe to our YouTube channel, iTunes, but I'm going to pass it over to Jake, and I'm hope to see everyone next week. Now, please invite somebody. We want to grow this community. We want more people to know about this. Okay. So please invite people, and I will see everybody next week. Okay. Bye. Jake, I want to make you host, make you full host. So it doesn't just kick everybody. Host disabled. You're the full host. You're good, right?
Yep. I should be good.
Bye, guys.
All right.
Later.
Okay, everyone. So now that Brett's gone, the party has started. No, I'm just teasing. Yeah. So, I mean, with the Deferred Sales Trust and highly appreciated assets, whether it be crypto, whether it be any of these other things that we've talked about today, there's a number of different outcomes. And again, what we try to do first and foremost is understand what the client's desired objectives are, because that way we're not just pitching a product or a service. And so based on what they want to do and what they want to accomplish, Brett talks quite a bit about this individual who drives the orange McLaren. This individual has the desire to continue to reinvest and to go from the substantial figure he's at to a much more substantial figure, which is, I mean, for us, these are a lot of zeros, but essentially that's about 4 times what he has right now. So how does he take what he's done extremely well and 4 times it? All right. If he takes what he's done extremely well right now and pays taxes on it, he's going to lose half. So out the gate, instead of 4 times it, now he's got 8 times it, if he pays taxes on all of it. However, with the Deferred Sales Trust, everything that rolls in can continue to roll forward, as if, just like your 401k or some other retirement plan, money inside, you invest in Coca-Cola, you sell Coca-Cola, you buy Pepsi, you sell Pepsi, you buy whatever. You're not paying taxes on every single transaction like you normally would if it were a house that you own, or if it were a business that you own, or if it were crypto that you own personally, right? And so the Deferred Sales Trust provides that vehicle in between that shelters you from receiving contractual receipt of whatever sales transaction is occurring, and allows you to continue to process future transactions moving forward without it being a taxable event to you.
So this is interesting to me. In my former life, I was an attorney. So the reason that the DST works from a tax perspective, I think is what I heard you say, Jake, is because you never legally get constructive receipt of the gain. It stays in the trust, and therefore it does not become a taxable event. Is that sort of the secret sauce that allows all this to happen?
And I wouldn't necessarily call it secret sauce, but that's one out of several pieces. That is a very critical piece. Essentially, just like you identified, if this is you, and then there's a buyer out there and he's going to give somebody money for whatever it is that you're selling, the trust steps in the middle and receives those funds. You don't receive those funds, so you don't take contractual receipt. That is one of the big pieces right there. Go ahead, Sandra. I see you raising your
So
finger.
my question is, are you buying the property in a trust to begin with?
No, this is just something that you already own.
Okay.
Now, once the trust is funded, so once there's been any transactions, you've sold something, then you can use the proceeds inside there to then go and purchase other stuff, right? But in order to be eligible, you must first have a taxable transaction that would be substantial enough to warrant fees and expenses of everybody involved, if that makes sense. We usually say, as Pierce brought up earlier, what are the numbers again, Pierce?
$1 million and $1 million.
$1 million and $1 million. So we like there to be at least $1 million in gross sales proceeds, so to speak. We like there to be very low basis. And we like there to be very low debt, right? If there's a lot of debt or if there's a lot of basis, we like the sales price to be bigger, but we can still accomplish this even if all the numbers don't line up. It's just not as big of a home run. And you have to weigh the pros and cons of participating.
Okay, so the
And if we-
transaction has to be at least $1 million.
Let's just look at it this way. Without the Obama tax and without state taxes and everything else, 20% capital gains tax on $1 million, you're paying $200,000.
Mhm.
At that point, we feel like there's enough pain that it's a no-brainer to use the deferred sales trust, because if you pay the taxes, you're only going to have around $800,000 left
Right.
over at the end of the day. At what point does it make sense to go down this process and have two new team members with you in the future, Brett and myself, helping you navigate the use of the deferred sales trust? Well, what if you could have 1 million rather than 800,000? Okay, so if you have $1 million, that's that's a 25% increase from the 800,000, right?
Mhm.
And so maybe at that point and beyond, it makes sense to go through all the process necessary to make this happen.
Okay, so I need to send some people to you first and sit down and listen to you while you explain the process to them.
And that's perfectly fine. So that's actually what a lot of people do. You'd be surprised how many people hear what we say, and it sounds like such a good thing, but they don't necessarily understand it all. And they bring someone to the table that they know that's going to have a big taxable event. We help them with it, and then like the light just clicks, like they've seen it happen in real life. And then they're like, oh, I'm going to do this next.
Okay.
And
All
so-
right, that's what I'm here is to learn. So
Hey, Jake, let's say that you're in California, like Rebecca said. Does this process save on federal and state
It does.
taxes, not just?
So let me tell you about an international transaction that's going to happen right now.
Okay.
We've all heard those stories and sometimes received those fraudulent emails about some rich uncle that nobody knew about that died and left money. Well, all those fraudulent emails, they're out there because sometimes it really happens. And this is a scenario where a German rich uncle has left a substantial estate to a California resident that doesn't speak German at all, and to several other heirs. His piece of the estate alone, is $5 million. To divvy out the estate, they have to sell the property. And then they have to assign like a K1 type of income, whatever, to a person, a business, something, right? And so in this scenario, the individual is most concerned about all the US stuff, because the estate is going to take out from his portion, everything that is, in Germany and everything else and all the estate stuff that they're dealing with. He's just concerned about, well, what, I'm a US resident, I live in California, and my goodness, this is looking like, at the end of the day, 5 million, that's great. I'm just going to give up half of it to the federal government and the state of California. However, we can set up this deferred sales trust to receive something that is not allocated to him yet, because the estate is not executed. There are contingencies still in place. So it is not something that he can knock on their door and say, I want this now. Not all contingencies have been removed. The executor could actually decide not to give it to him, so things are worded correctly. And, based on when he's eligible to receive it, should he have a deferred sales trust set up beforehand, he will actually have a promissory note for his rights to that estate portion. He will have a equal promissory note. It's almost like a pre-sale to the trust. The trust will receive the proceeds. Him and his personal estate will receive the promissory note. Trust receives the $5 million. And essentially, this is all just deferred stuff. Deferred meaning it's recognized by the US government, it's recognized by the state of California as monies that he will eventually, at some point, because of the promissory note, receive. But it's being deferred for all intents and purposes for taxes. At which time it allows him to take, instead of $2.5 million, it allows him to reinvest all $5 million into other assets and continue to make it grow. Now, that was a lot of information, Andrew, but I hope that I'm connecting more of the dots. You're talking about this secret sauce. It's not so secret. I mean, it's been around for 25 years. There's been thousands of deferred sales trusts. It's just been very well protected. Not so much secret, but safeguarded so that people don't abuse it and do it a different way.
I have a question. So
Yes.
if somebody won the lottery in California, let's say, would that work to set up a trust in order?
That is a question I've never had, and I probably
Okay.
have to ask the attorneys. My thoughts are this. In winning the lottery,
Yes.
they have immediate rights to that money. I do not believe that there are any contingencies in place that prohibit them. I'm not an attorney, by the way, but I don't think that there are any contingencies in place that prohibit them from knocking on the door somewhere and saying, give me my money. Once they've won, right?
Right.
Now, should they think that they might have the winning ticket, and should they sell their rights to that winning ticket to a trust before the lottery happens? Possibly, but who would ever do that? I
Right.
mean,
Okay.
games of chance are not necessary. I mean, that's just, I don't think that it would be a fit. But again, the law firm would be the ultimate say on something like that.
So one thing you said earlier, Jake, was you don't have to sell an asset in a rising market and then buy an asset in a rising market in the shotgun marriage of a 1031.
Yeah.
So let's go ahead.
You're using the word asset. I was talking real estate. Let me talk a little bit about what my role with the Deferred Sales Trust is as a financial advisor. We help people across all asset classes, including marketable securities. And for people who are waiting for that right opportunity, so they sold in an up market, fantastic. That's what a lot of people with crypto are waiting for right now. They're waiting for when they're comfortable with how high things are going, that they're going to sell out, they're going to receive the funds into the Deferred Sales Trust, and they may want to reinvest in crypto again, but they might want to wait until it troughs down, right? So during that waiting period, we invest in places that are very traditional, the normal liquid marketable securities, shooting for 8, 10, 12%, nothing too outrageous, and just being very conservative so that if there is a down market or an up market, wherever the market's doing, that may not be their goal. They're not looking to make their big growth necessarily in the market, but we're housing it there for efficiency purposes, as if this is a corporate asset management account, right? And we're just making money while we're waiting for the next big opportunity. So with that being said, there is a liquidity requirement. At any given time, because of that promissory note, we have to prove that we have liquid funds available. So we almost always maintain, there are a few exceptions, but almost always we maintain 20% of your portfolio in marketable securities. And that way we can prove at any given time to the IRS, should we need to make this 8% promissory note payment or what have you, that there's liquid funds available in marketable securities to make that payment with at any given time. And then with the other 80%, we can invest in what I call hard assets or risky assets. I call them hard or risky because it might be a piece of land that's not easily liquidated because you might develop on that land. It might be houses. It might be syndications. It might be crypto of which maybe, crypto in the world that a lot of us understand, you can easily liquidate it, but it's not considered an easily liquid asset because there are various forms of crypto that you can't just exchange from one day to another.
Right.
So anyway,
Right.
with that,
yeah. I was going to jump in there. I said the problem isn't that you can't liquidate it. It's that when you start liquidating it, you can take a crypto that, let's say you had 100,000 that were worth $1. Your first one you're selling for 100,000 and you're selling it $1. Your last one you're selling it at 10 cents.
yes,
And so you hurt yourself. It's almost cheaper to pay the taxes than just, than pay the
Sell all at once.
liquidation fee. Mhm.
right. And so for those purposes, we maintain 20% in marketable securities, which then allow us to provide that liquidity requirement, which is one of the other pieces of the secret sauce, so to speak, that makes this all work.
There needs to be liquidity within the trust
Correct.
so that it could potentially pay the beneficiary of the trust, the individual. What's the purpose of that?
The lien holder. So in the beginning,
Lien holder.
let's say that you've got a luxury home in California and your basis is 500,000, but now it's worth like $3 million. Fantastic, right? But your married filing joint exclusion only covers so much. And to avoid, because you're not going to reinvest in another home, you're going to reinvest it in other stuff. We're going to use the Deferred Sales Trust.
Okay. All
right. So we roll the $3 million into the Deferred Sales Trust. Before we do that, before the sales transaction occurs, the law firm, the attorneys, they set up the trust. They set up the trust so that it can be the recipient of the proceeds. But before, so that there's not like a transfer tax, it's almost like there's a pre-sale before the sale. What is the pre-sale? Well, the house is in your name. How do we get it into the name of the trust? We exchange the house for a promissory note to you simultaneously before we process the sales transaction to then sell the house that is now in the name of the trust to whoever is buying it. Now, you have a corresponding promissory note for the same value of which entered the trust. The goal here on the estate planning side is, should the trust then grow substantially, your promissory note remains the same that it always was, right? So for other individuals, an individual here in Utah that has $100 million development, should they, for estate planning purposes, sell the development and reinvest in another one, they'll get a new depreciation schedule, which is fantastic. Two, they're not going to get rid of what was already in their estate, but whatever it could grow to in the future grows outside of their estate. So they have that 100 million, but they're like stopping what is subject to their estate. And they exchanged it for a promissory note, which just for, so that it doesn't look like we're self-dealing or anything else, we use a more aggressive interest rate, like 8%. That is typically our default. It's not a hard and fast have to, but it doesn't draw any attention. Like if we charge 2 or 3%, that would draw attention, like we're giving ourselves a preferential deal, right? So we use that 8%. Now, depending on the size of the trust, it may be a normal deferred sales trust, or it might be a deferred sales trust plus, and this is really jumping into some technicalities here, but it allows for there to be this promissory note, which may or may not be paid out. I say may or may not be paid out, depending on the timing and everything else. It's always prudent at some point in the future, if we have a promissory note, that we make a payment so that the IRS sees that it's not just accruing inside, that there is intent to pay things out, that it really is a deferred thing and not an avoidance thing. Does that make sense? And then in order for us to actually be making payments, which is actually required if we have substantially more money in there, to be making this interest payment out on the promissory note, we have to have that liquidity requirement for the holdings of the trust.
So
And
I don't know. I don't know if this is everyone else understands this well, but because I'm a little bit slow.
No, you're good.
You know,
Feel free to ask questions.
the trust has made a promise to the trust holder, right? The individual at the end of the sort of organizational chart, to make payments along the way for the duration of the deferred sale. Is that accurate?
Mhm. So think of it as an installment,
Okay.
right? Without there actually having to be like the actual installments given out, but there needs to be that interest portion of the installment that is either accrued or being paid out. And again, if we do something that is substantially bigger in size, there was I think $120 million home in California that this happened with, and it was actually reviewed. There was a deep dive audit, and because of how it was structured, this deep dive audit. So think of an audit as a four-way inspection of a home. A home inspector, when a home is being built, to justify their job to the county or the municipality, they feel obligated to find something with the heating and air, the water, the lights, whatever, right? Something with the insulation that just wasn't done right. That outlet cover was crooked, what have you, right? So they have to find something. That would be like a finding. And then if it's egregious enough, like that wall needs to be moved, then they're going to ask you to change something. Okay. So in a tax audit, there's findings and there's changes as well. A change means, like, in order for this to be valid and not disallowed, you need to change something. A finding is, hey, I just, an item that I've noticed that maybe, doesn't really pass the sniff test, but really isn't an issue. It's just a finding. And I'm oversimplifying this, of course. Now, this deep dive audit, what is a deep dive? It's not just a cursory, it's not just like a detail that they're looking at. They're reviewing the entire thing. And it came out with a 0 findings. So sniff test, all good. And a 0 change audit, which almost never happens. Again, if we go back to real estate, almost every home, an inspector has to try to find something to justify their job. Same thing with an IRS auditor. They have to, especially if they're going to do a deep dive and exert so much money and effort and manpower and everything else, they're going to try to find something. And 0 findings, 0 changes. What does that tell you? That means that the way that this is all put together, Andrew, you mentioned the secret sauce, or just how it was originally built, is so solid, and there's not a lot of people out there changing it up their own way, so it's not being abused, that it has passed not only this audit, but 14 audits in total. Now, if 1 out of every 2,000 people get an audit, that gives you an idea of how many trusts are out there. All right. So this is something that has been going on for 25 years, and it's been very successful. And the law firm that helps you with this, they provide lifelong audit protection, because they have an incentive to continue to make sure that they have an ongoing 100% track record with their strategy. Now, the one thing I would just alter from your comment earlier is not so much the trust person or whatever. It would be you're exchanging, you hold the asset, you transfer the asset to the trust for a promissory note. So it's almost like you're the bank now. You're now the lien holder, right? And of course, you can designate who the beneficiaries are. But the person who owns the property or the corpus would now be the trustee. That's for purposes of the IRS. So when the IRS, they do their deep dive and they put on their laser eyes and they want to really analyze everything, they're not analyzing you, because you've never received the proceeds. You've never taken contractual receipt of the proceeds of that sale. I mean, at some point, you're going to take a distribution beyond interest. And at that point, that's like a K1 to you, and that's income, right? And it'll have the same tax treatment it would have had during the original transaction, just deferred to some future date. And so great questions. And we enjoy going down into the actual mechanics of how this works. A lot of times it makes a lot more sense if we have a real life, like your real life scenario, or a client of yours real life scenario on how it can be put together, because then we can actually plug in all the pieces and customize it to that scenario.
What's the end game with the trust? Right? Is the idea, hey, I'm going to have this until I die for the next 50 years? Or is it like, we plan to have this for 3 years and then X occurs?
Yeah. So normally this is a long-term strategy. And when I say long-term, it could be for the next 10 years, or it can be for life. And again, the goal here is to take the entire proceeds of whatever asset that you have, and instead of net of taxes, it's just net of attorney fees, right? And then snowball it and continue to grow it going forward. If somebody wants to sell an asset and just be done, that, again, this is part of the eligibility stuff that we go over with clients in the very beginning to make sure that it's a good fit, right? If they just want to sell something and spend the money on a lot of personal stuff, this is not a good fit, because this is for people who want to reinvest. And it might be reinvest in businesses, reinvest in crypto, reinvest in real estate. And I see that there is a question down here. How does the DST invest in crypto? So similarly, how you invested in crypto, you opened up a digital wallet, or you worked in the DeFis, or you know, all the different things that people do when they invest in crypto. That also happens, but within the Deferred Sales Trust. Think of the Deferred Sales Trust here. And in the name of the Deferred Sales Trust, you open up a digital wallet. We've had some great success with Kraken, Gemini, and a few others. Kraken, we actually have an assigned person at Kraken that it's the same person every time that handles our Deferred Sales Trust digital wallets, which has facilitated the process. The very first one that we did took over 90 days to set up. The last one we did took 3. It was either 3 or it happened on a weekend and it became 5. One of those. It just depends if you count the business days or the total days, right? It was very fast. And so their legal team and everybody else, because they're like, well, this isn't an LLC, this isn't a grantor trust. What is this? So they all reviewed it, and it almost feels good that they like accepted it, and that they're like, yeah, this works, and this is an entity that we will recognize and absolutely will open up Deferred Sales Trust digital wallets. And so that's just like another confirmation of how things are progressing towards the Deferred Sales Trust being a more commonly used financial tool. And we have ran out of time. Andrew, you are either hungry or you have lots of thoughts and questions. Feel free to reach out to Brett or
A little bit of both.
Yeah. Feel free to reach out. Next Friday, we're here as well, but I would say before then, in the middle of the week, let's answer any and all questions that you have. Brett announced how you can reach out and get in touch with him. I have a booking page on alphamarktax.com where there's a booking link at the top right. You can also reach out at 1-800-773-1848. Ask for Jake Meller, and we can definitely help you with your scenario, your specific circumstance. You or one of your clients who might be going through a highly appreciated asset sales transaction. Pierce York is also available to discuss all things luxury real estate, as well as the Deferred Sales Trust and how it may be applicable to you. How do people reach you, Pierce?
You guys can call me on my cell. I'll put it in the group chat. Or you can reach out to me at kingdomluxuryrealty.com.
And if people are interested in real estate syndication or an opportunity to invest, Andrew, how do people reach out to you?
Yeah, my email up at the bottom, it's drew@nighthawkequity.com. And I'm also on Instagram at DrewNiff, so I'll put it out right here.
Very good. And Nighthawk with a K, right?
Without a K. Yeah,
Without
good distinction. So let me, Drew at Nighthawk.
Where do you do most of your syndications?
Our syndications are in the Southeast. Our last 4 have all been in Atlanta, Northern Atlanta. So we're looking for areas where there's 3 things: job growth, income growth, population growth. Because those demographic trends happen in decades. There's long-term secular economic tailwinds that are gonna help out your investment. So that's where we're investing.
Oh, Atlanta. What about Florida?
We're not in Florida right now. We're looking at the Carolinas at this point, but Florida's on the map. It's geographically close and it meets that bullseye I just talked about. The issue is we want to go places where we have vendors that we know, like, and trust that can go with us and execute in Florida like they do in Atlanta. And right now, those vendors more easily are migrating to the Carolinas than they are south. But if we find that, we're open to it too, but not at this point in time.
What kind of cap rates are you guys seeing out there?
About 4. Well,
let's continue this on the next call.
Yeah.
I'm 5 minutes late for my next meeting, and
Yep.
I gotta get that started.
Pierce, happy to talk with you offline or the next meeting.
I'll email you.
Yeah, you bet, man.
Appreciate you guys. Thank you, everyone.
Okay,
See ya.
bye.
Bye.